Hi, this is Randy Finney with the Right Side of the Chart, and today is Wednesday, October 4th, 2017. I wanted to do another video talking a little bit more about gold. I shared my thoughts on that in the last couple days, looking for a near-term rally and quite likely followed by another thrust lower. And again, I wanted to reiterate, as I did yesterday, that I am open to the possibility that the euro US dollar pair may hold this 117 level, and this may be all we get as far as a correction in the euro, bounce in the dollar. And then, if that is the case, we resume the uptrend in the euro, the dollar continues to fall, and that should be positive for gold. So, as I mentioned yesterday, if you're, longer term bullish, or you just want to have a trade that may become a runner. In other words, you go long here for this bounce, what may just prove to be a short-lived bounce with another thrust lower. However, it may not. So you go long gold. Either way, you're profitable if you went long yesterday or the day before. It's up again today. So we're getting that, that rally that I was looking for. And again, it may morph into more. So you have a lot of options. I can't go over all those. It's virtually, any combination of things. You can set a stop at your entry price to guarantee at least a break even, no losses on the trade. You can raise stops to protect profits. You can trail stops. Any way you want to play it. And the primary trend I believe in gold remains up, bullish. My longer term outlook for the U.S. dollar remains bearish, meaning I think there's more downside. So that should mean, if that's correct, the euro will continue to rise against the dollar. So let's just look at the charts and take them for what they are. Here's that euro US dollar pair. There's a 117 level. We came down, almost hit the T1 level, bounced up to my bounce target, and then did hit that level. You can see perfectly. I mean, this is not just a random number, 117. You can see it's pretty well defined support. And so far, we traded that support, the 117 level proved to be support 2 days in a row. We're bouncing, moved up a little bit higher, starting to see the PPO curl over here. We definitely, came down, worked off these overbought conditions and the negative divergence. Now the question is, this was a pretty powerful divergent high, and we had a pretty decent correction so far. Is that enough? Maybe, maybe not. Again, right now, I'm still leaning slightly towards this other thrust down here. And again, my analysis on the euro is largely predicated on this big, powerful breakout we have here. There it is. Multi-year basing pattern, and this is a weekly chart of the euro US dollar, and I've covered this quite a bit. Bullish divergent low here, very powerful thrust up and out of the basing pattern. So this was a breakout, and my preferred scenario still remains pull back to test the top part of the pattern, somewhere in there, maybe slightly below to fake a few people out, maybe reverse slightly above. You can't nail the exact top or end of the pullback, but that would work well because it would help to reset these overbought conditions. Now, keep in mind, we've already moved well back in within below the 70 level, so we're not overbought any longer. It was just such a powerful reading that for the longer term bullish case, it would really help to reset and work these overbought conditions off a little bit more, maybe come back in, back test the 50 level on the RSI. That tends to often act as support when tested from above, and then move on up. So that would be, let's just say, my preferred scenario. Would make for a lasting rally. But because of how bullish this is a multi-year, almost a 3-year basing pattern. So this breakout has longer term bullish implications. Sometimes when you have a clear breakout like this, it just leaves those behind. It leaves those that were either are short the euro US dollar pair, short the euro against the dollar, or they maybe those that want to get in on this train and are waiting for that perfect pullback. Very often, these strong breakouts, they will deny that entry to those. They won't let the shorts out, or they won't let the longs back in. So you get in this case, a pullback that is, meets the very shallow end of any expectations. That's a possibility. I wish I could tell you which one, but I can tell you this. Let's just watch the charts. Again, let's watch a impulsive break and close below 117. That opens the door to move down to this target zone. But when we look here, I go to the 60-minute chart. I didn't cover this yesterday. You guys know one of my, well, I can't say I have a favorite time frame, but my two primary time frames when swing trading are the daily and 60-minute time frames. I'll look at everything else. I'll go down shorter, 5, 10, 15-minute charts. Depends, really what the trade is and how long I plan to be in it. But you can see here, I like to see these 60-minute divergent highs and lows. So back here we had a divergent high breakdown. That divergent high, there was a first thrust down, little kickback rally, fell shy of the highs, and we've been in a downtrend since. So this really was your, hey, uh, get out of or expect a trend reversal or at least a correction in the euro US dollar, and that's been the case. Now we've come full circle. We had a divergent low, well, only in the PPO right here. We started at this point, you can see the negative divergence. These lines right here against this line. Now we have across all these indicators on here, we have bullish divergence in place confirmed on this most recent low. That may mark the end of the downtrend and the beginning of a new uptrend. So there's some pretty good evidence that we may have seen the end of this correction in the euro US dollar. And if so, where am I going with this? Well, that would be bullish for gold. If we flip over to this chart here, this is a chart comparing the euro US dollar pair in black, that's the black line, to gold, GLD, the ETF. And this goes all the way back to 2014. I'll check that price alert in a second. And you can see the blue line and the black lines, they nearly mirror each other. Now don't look at so much the differential in price. Sometimes there are these temporary disconnects. I'll draw it out for you there. Sometimes, and I mentioned this, you will see a disconnect where one goes up, the other goes down. But then for the most part, look at the trend. You can see here the euro US dollar pair was rising, and then so was gold. So again, when you look at this black line, it is the euro against the dollar. So when this black line is moving up, the euro is gaining strength against the dollar, means the dollar is falling. A falling dollar is bullish for gold. And you can see this is a very tight correlation. It's not a perfect correlation. Very few are in the financial markets. There are those periods of temporary disconnects due to whatever factors it is, supply demand imbalances, other things. But there's the case made. So I don't need to do this. You can do your own chart. Go back as long as you want, and you'll see a very strong correlation, or I should say, an inverse correlation between the U.S. dollar and the price of gold. Okay, so I probably spent half the video just talking about, analyzing the euro, US dollar, and, highlighting that correlation between gold. And I think, again, it's important because it's a big part of my analysis. So, if you see my analysis or hear me talking in these videos, you might say, well, forget about the euro. I don't care about the dollar or the euro. Just talk about gold. If the charts aren't in alignment, this is where I find value. Maybe I see a bullish chart formation on gold or GDX, but I can't confirm it. It's contradicting with some my expectation for or outlook for the U.S. dollar. Then I might back off that trade, or take it with a grain of salt, the bullish setup that I'm seeing in gold, and maybe just sit back and watch. Now here's gold, GLD. What do I see here? A couple things. You can see the PPO. Now the trend has been whippy. See, gold's been sideways. I talk about these trend indicators. They work great in a strong trending market. And what I mean by that, you guys have probably heard me talk about this one a lot. The PPO signal line, the 9 EMA, when it's above the zero line, the trend is bullish, as it was. Even if we go to left of the chart here, the trend was bullish up until here. Then we had a bearish crossover here. The trend was bearish. It told you to get out of gold, stay out of gold, up until we got a bullish crossover right about here. And you can see it kept you long throughout most of that uptrend here. Now, what I often say is trend indicators are great when a security is trending, but when you have sideways consolidation like this, then you're going to get a lot of whipsaw signals above and below the zero line in this case with this particular trend indicator. So take it for what it's worth. Now we seem to have broken out above the top of this range. We came back in a little bit, so this may be a breakout, and we're coming back in. There were a couple peaks here, but when I look at this chart, at least the way I see things, I see a lot of the trading action was in this range right here. So maybe this is a breakout here, and we're coming back in. And if you exclude these two peaks here, this we might find some support here. So this would be the bullish case or bullish scenario in gold, and we might continue on higher. We back test the breakout of that sideways trading range. So it's worth noting, and this is where I was leading to, is right now the 9 EMA is coming. We're pretty much on the zero line, so we're either going to have a successful back test here and a continued move higher, or we come back down and continue lower. Uh, it's worth noting all these white arrows show that, and I talk about this a lot, the zero line on the RSI, which is right in the middle between the overbought reading of 70 and the oversold reading of 30, that often acts as support or resistance when tested above, as all these arrows show. I won't go over all. You can see them there. Pause the video if you like. So we crossed down below, and that put us in, at least by this indicator, in bearish territory. We back tested and failed there at the 50 level, and we're pointing lower right now. So by if you want to use a very simple, you know, view of these trend indicators, these momentum indicators, they're both pointing lower. And as of now, that's bearish. So you need to just be a little cautious here. You want to step in, take a shot at it. As I said, trail a stop, whatever. It might prove these things may reverse, roll over. You may have the 9 EMA here find support, turn back up, PPO moves up, prices move up, and it's all good. And we could see another bigger leg up. So define your trading style, your time horizon. You want to get a quick bounce on GDX. Let's take a look at that real quick and do an update there on that chart. What did I show you yesterday? I think I showed you the bullish falling wedge pattern here on the 60-minute chart. So you can see now we have broken out of that bullish falling wedge pattern. Almost hit my first target there. It's around 2350. You have these different targets up here, 2390, and ultimately at this point in time, before a meaningful reversal or pullback, I could see a move possibly as high as a 2415 level. So we'll have to see how that works out. But you can see the bullish falling wedge confirmed with bullish divergence, and that was a buy signal. There's a breakout. Volume's not very impressive on the breakout. I do have to say that it's been lackluster so far. So let's just see what happens here. Trend indicator, we just flipped a bullish. If you look really close, you can see a couple um, green bars here on this histogram, the 1333. This is a trend indicator I use. It's a custom one I've made where I take a 13 period EMA and a 33 period EMA. Instead of putting them up on the chart, I put them in histogram form here. So it shows when they cross over. So when the 13 crosses down below the 33, the trend goes bearish. You can see the indicator's done a pretty good job of keeping you long during the uptrends, short during the downtrends. And now we have a buy signal there, a crossover. And as I often say, this PPO, and you can use on just about any time frame. Here it's on the 60-minute chart. It's currently testing that zero level. So again, we're at a pretty, I'm seeing a lot of key potential inflection points here or critical technical levels because you have this PPO wanting to make a bullish cross with the signal line, and that would put this or help confirm the 60-minute trend. This was a breakout. So far my trend indicators, one's flipped to bullish. This one is, yeah, it's slightly crossed above, but let's see how the day closes. But as of now, they have crossed. So that puts those 60-minute trend indicators on bullish. Your early buy signal was a breakout. That's first and foremost, of course, would be a buy signal, a breakout of a trend line. But I told you I'm not crazy about this trend line or this wedge. There's only a few reactions there, and there's not a lot of volume. So maybe we limp up. Maybe we start taking some volume and move up impulsively. We'll see. Daily chart. Now we're getting to the bigger picture. GDX. We have a nice. This is really what has kept me longer term bullish. For a while, this was the purple lines show this wedge type pattern was confirmed with bullish divergence. We had a divergent low here, another divergent low there, finally a breakout of the pattern. And this was a well-defined downtrend line. I like that. So we broke out, back tested, moved higher. And so far, this just appears to be this was the initial thrust, really off the divergent low, the initial thrust, and since the breakout in the first counter trend rally. Nothing goes up forever. So if we can find support here, you can see these support levels 23 to 2350-ish in there. That would be quite bullish for GDX, and we may see that. You can see the PPO right now, just as with gold, is back testing that zero level from above. So if we can reverse here, that would help affirm the trend is bullish. RSI has a little bit of work to do. It's below 50, but that's like I said, the 50 level does act as support and resistance from above, but sometimes you go in, slice above it, slice below it, Again, you have to take these all as a whole and not any one. You're never going to have, or rarely will you have every signal lining up perfectly. But again, I put a little more weight into this one than I do that one. And of course, price comes first and foremost. So we have a breakout, back test of we'll call it a moderate support zone. It's not super well defined. Prices have chopped through it, but I do have those lines there for a reason. There are a lot of reactions along each of those, so I do think they're technically significant. So that's GDX for you. So we watch it. If it drops below 2250, you're going to see a bearish cross on the trend indicator. You're going to see this RSI fail down below the 50 level. These would all be bearish for gold and GDX in this. And this is the very, very big picture, zooming all the way out to a monthly chart on the Huey. For those of you not familiar, GDX is an ETF. It's only been around for so long, you can't go back in time. The Huey Amex Gold Bug Index has been around for a long time, so I can pull up a monthly chart going back into the mid 90s here. And you can see this was a big, powerful bull market, terminated with a divergent high trend line break. And so this was the bear market, the vicious bear market in the precious metal stocks from the 2011 highs down to the late 2015, early 2016 lows. Appears to me that first of all that wedge pattern, if you look at these two lines here, this line and this line, the orange lines, that wedge pattern has more than met its measured target. So I think it's safe to say that bear market's over. I mean, one can't argue, the Huey has gone up 188%. So, and it also ended with a divergent low, at least on the RSI, you had divergence here. And so this looks like the first leg up in a new bull market, followed by a period of consolidation. It was a very strong run, became very overbought. Digesting those gains. You can see even here on the PPO on the monthly chart, flirting right now with that zero level. And this is again long-term implications here. You can see how it kept you short, telling you the gold stocks were in a bear market all this while with the PPO under the 9 EMA under the zero line. And then from this point on right here, it said, hey, welcome to a new bull market. And that was a very powerful and profitable bull market to trade. It tested it once here, successfully came right off that zero level. As I said, it often acts as support or resistance when tested from above or below. And at this point here, it told you, all right, guys, it's been a nice ride, time to get out. And that came right around that trend line break. And then it said, welcome to the new bear market. And now we are at a critical, inflection point. It's a monthly chart. Don't expect anything to happen soon here. You'll need to see a definitive cross up above here, especially on a monthly close. And that may take a while. Again, we've been consolidating. That's why these trend indicators are just flattening out right now. The RSI is flattening out. But this is something to look for in the months ahead to see a clear cross back into bullish territory. The RSI to defend that 50 level, and of course we want to see this previous reaction high get taken out. And that will say, okay, well, this was just leg one, the first leg up in a new bull market. This was the first corrective phase. And then, we go up probably that if you're an Elliott waver, that's wave one of five, primary wave. This is wave two. And wave three will be the most powerful, at least if, according to Elliott wave. And so we may be about to embark on that. Maybe, maybe not. Let's see what happens. Okay, last but not least, I want to wrap this video up with a look at gold. This is, I'm using stock charts here, gold continuous contract. So this goes back, it is a daily time frame, and I'm looking back, let's see, all the way back into 2012, looks like here. So going back quite a ways. Now, here's a few things. I won't go over every little detail in this chart, but a couple things that stand out to me right now. Number one, I'm trying to fit it onto the screen. I'm going to start here with the left, and then I'll move this chart over a little bit. There are two things that really stand out, and those are the clear buy and sell signals on gold. If you want to really keep this super simple and you're a swing or even a trend trader and you want to just catch major trends, you don't want to trade so actively worrying about the 15, 60-minute charts, 30-minute charts. And I've talked about this over many years. Overbought and oversold in themselves aren't exact timing signals, they're not buy and sell indicators, but they do a darn good job, I should say a damn good job of telling you, as I've shared this chart for many years, ideally you want to be buying and selling gold immediately following oversold and overbought readings in the RSI. Just stop, screenshot this chart and do this yourself. Just take a look here and look at these oversold readings. For example, here, the ones in red. And you can see what has happened following those, I'm sorry, overbought readings, overbought. And you can see what has happened. So if you just, I mean, in a simple strategy, now, as I often say, overbought can become overbought, so it's not a timing indicator. One of the best signals is usually to wait to see prices move back down after they've crossed up above the overbought level. That helps to hone your entries. But even if you're willing to ride out a little pain before the reversal set in, like you can see your success ratio, you would have caught, even if you didn't get exactly in at the top, every single overbought reading, and it was either followed immediately by correction. In this case, you had another thrust higher. You did have a reversal off that first overbought reading, but then you had negative divergence. And that's the other thing I wanted to mention too. If you add in the, if you can get both overbought or oversold with bullish or bearish divergence, a few times here you can see the divergence lines that I have marked on the down below. There's positive divergence, there's positive divergence, there's positive divergence, and let's clear out all the lines that got kind of busy. Um, and all the green arrows are circled. And again, you can see the green arrows, same thing. If I go through in reverse, you're going to see without fail, when you had these oversold readings, that was when you wanted to get long. Okay, so where am I going with this? Well, right now we're in no man's land. We had the last signal we had based on this was right here at this point in time, at this last surge when we were overbought on the RSI. We had a very strong overbought reading too. That was a good time at the very least. If even if you're a gold bug and you only trade long on the only trade gold long on the long side, I should say, that tells you, okay, maybe tighten your stops, raise stops. Yes, it could have become more overbought, but at least raise your stops to protect, profits, or go ahead and sell out of your position. If you just bought here down when you were oversold and then sold when you were overbought, you do very well. But also, again, you do so much better factoring in those other things that I mentioned, the divergences, the trend line breaks on the daily and 60-minute charts, and that's what allows you to continue to profit sometimes when you just kiss that 70 level instead of it being one of these. You have a lot of these right here. You can see where you just hit the 70 level, but then pulled back. But then you have some of these big ones where you hit the overbought level. You were overbought right here, but gold continued to advance. And then it had a little pullback and it made another thrust up, and it did so with a divergent high. So again, you can actually accentuate or filter out some of these signals and decide when to ride. But again, what I was saying right now, we're wrong tool. Sorry about that. We're not oversold. We have certainly come off overbought readings, but your next really, high probability signal will be if and when gold gets down here. Um, During bull trends, it's not very common to see oversold readings. We had a couple here because gold was consolidating sideways, but during a bear market, oversold is very common. And just as overbought becomes less common during a downtrend, you can see the downtrend, fewer overbought readings than you had oversold readings. So there it is. That we're sort of in no man's land, at least by that metric there. Yeah, I will note there is a back test here. You can see this downtrend line. Fairly well defined. Again, I'm not crazy about it. Only has a few reactions. So let's just see what happens here. Again, if you want a higher probability trade, sit back for a little bit, wait for gold to really confirm, wait for some of these, wait to see a reversal here. And some of those things that I talked about earlier, those trend indicators, the PPO and other things like that, wait for those to flip to bullish or hold, make a successful back test at the zero level or whatever lines you're looking at. So there it is, a little bit of a mixed picture. And I'm going to stop it here. I had a handful of my favorite gold stocks that I wanted to highlight for you guys. I'll have to do that either in another video or another post. This has been Randy Finney with Right Side of the Chart. Hope